Hey there. Hope all is well. It's been a minute since I've actually, combed through the news and shared some articles with you guys. So I thought I would take a minute. And today I came across what seemed like a trend of just very, real news, yet negative in a sense. But here's one good story here from Epic Times. It's Citigroup's Willem Buiter says he would hold gold. And then he goes on to list why he would. So this interview here is about 30, 40 minutes, but to give you just a little wrap up of what he mentioned, he basically just mentions how gold really is not good for anything, but yet because things are so bad in the economy, and he mentioned negative rates, the fact we're in a negative rate environment, that when it comes to currencies, it's worthwhile to have some gold along with some fiat currencies. And so he actually goes through here and kind of downplays it a little bit, but yet ultimately the tone that he has is that it's good to have gold. And so it says gold in times of uncertainty, and especially in days of uncertainty laced with negative rates, looks pretty good. And so, it's interesting how him being a banker, how he's, entertaining the idea of holding gold, where that's pretty much against the banking or bankers' policy for the most part, directing people towards gold. But yet, this interview here is definitely something worthwhile if you got a minute to check it out. I think it's definitely interesting perspective how he, goes through a little bit of a history of, fiat money and things like that. And but ultimately, he says that holding gold is worth your while. So that's some good news. And then on another note, here's an article here from what is this? It's the Daily Mail in the UK, and it's about the whole Brexit and how basically the Parliament there called Christine Lagarde, the IMF director, a clown in a sense. And so it's funny that politicians now are, name calling and things like that. And this article here has to do with the fact that Christine Lagarde and an IMF, economists, things like that, really gave a negative report in regards to the whole Brexit ordeal prior to, and saying how it would really hurt the economy and it would do, all this terrible things for the global economy. And now that, the Brexit actually went through, they're now coming out with a new, tone to their voice, saying that, oh, it's going to be, it's not going to be as bad, and it's going to be opportunity for UK to grow and things like that. And so basically, this guy here, Douglas Carswell, one of the Parliament members there, basically just calls her a clown for saying that, you guys have credibility issues. And so he says here, the IMF has serious credibility problems. It has been seriously wrong for years. I hope that one of the things that the new government does is push to have some credible people running this institution rather than the clowns running it right now. So it's just interesting how, a British Parliament member basically just calls out Christine Lagarde and just how, unaware these people actually are, and how their job is basically just to, you know, basically just, say some feel good type of things to keep confidence high, even though things are overall really, really bad. And I'm going to get to that in a minute as to why it is. And the next article here has to do with negative rates. And so this is from the Sovereign Investor. And here it's interesting how it's called negative rates. We're going to need a bigger vault. And so the writer of this here talks about how because of negative rates being in Japan and the European Union, how a lot of major banks now, a lot of this German Munich Re and one of the largest financial institutions in the world threaten to load up on lots of physical cash. And so there's other banks that's mentioned in this article here that talks about now, because having the digits in the bank actually it hurts you now that it's going to cost them to maintain money at the bank itself. So they would rather just collect cash now and start storing it start storing cash, physical cash, in their banks because it's safer. And then here at the very bottom it talks about how now safe deposit boxes are in shortage because more depositors now are choosing to withdraw their cash and actually put it in a safety deposit box. And so it gives a little information here saying that demand for safety deposit box has gone up tremendously. And so what they're actually storing in those boxes, as it says here, is they're actually storing physical cash and gold. And so my thought on that is the fact that if the banks are in trouble themselves, you're going to get a vault in the bank to store your cash and your gold. And it's just a matter of time before this negative stuff goes even further negative to where they're going to basically say you're not getting your cash or access to your box, and there goes your gold as well. And so here, just another idea of how this negative environment we're in is really causing problems for the banking sector, which is ultimately going to, reflect on the depositors and the citizens in general who, believe in the banking system as it has always been. And so here's another article here from Value Walk, and it's in regards to Deutsche Bank, and the global growth outlook has deteriorated significantly. And this article here, I think, is very, very telling, just beyond the negative interest rate environment. This here talks about how Deutsche Bank's forecast, and it lists a lot of other countries, and how this writer here is pretty much trying to say that everything is not as bad as it should, because the forecast is that there will be growth. So it gives a lot of numbers saying that 1.5% growth in 2016 and 2017 1.7, and these are all guesstimates on what they're hoping if environment was normal. But being that it's negative, it's good to say that there will be no real growth. How can you have growth in a negative environment where there's no real productivity or nothing new happening other than just the banking sector starting to deteriorate and collapse because of central planning? And here is an interesting thing here where it says this whole article is geared towards promoting different countries and things like that, and how they're going to grow in this next second half of the year and next year. But all the forecasts, even this graph here, depicts that things are not going to just automatically just start improving. And so it gives you an idea of the real GDP growth, and how in the beginning of the year in January everyone was relatively positive, but yet over the last couple months everything's dropped. The world has dropped. U.S. has dropped. UK, Germany, all these countries are dropping significantly. Even Brazil's in negative. But yet up here they said that because of the new leadership, where is it at? Because of the new leadership in Brazil, they're forecasting positive growth heading into 2017. And so it's interesting how they can tell you one thing but then show you something different. So that's just a typical mainstream media spiel. And then here's what's closer to home. The Fed gets caught in a crossfire between students and debt collectors. And so this is from Bloomberg, and this is a very interesting article in the fact that it shows how profitable it is to indebt the youth. And so it talks about how 1 in 8 Americans has a federal student loan, and complaints of mistreatment are legion. Unfortunately, a series of recent moves by the federal government could prolong borrowers' misery. And so it gives you some interesting stats how the federal pegs a total amount of debt at 1.4 trillion, double the amount since the start of 2009 crisis. And it talks about how about 3 million more, at least 1 month behind on their required payments. So that's 3 million students, of various ages that, believe that if they go to school and, improve themselves by, taking on debt to get a higher level of education, that they will be okay. But it's turned out not to be the case because of all the things that's happening globally, the lack of growth and the negative environment we're in is really starting to, hurt the labor markets. And so here, one thing that really stood out in this article is how the big arguments is just amongst who's fighting for government contracts. You have a variety of companies that's listed right here that's all fighting for government contracts. And so the idea that, if you, get you a good government deal, that you'll be okay, as far as being able to make money on helping these students restructure their debts and things like that. But awfully, it's all leading to just, more fraudulent activity, because it's all talk about lawsuits and how the government had to suspend 3 companies for being caught, doing some, fraudulent activity, as far as, telling students that, they could readjust here or readjust there, which really wasn't the case. And basically just doing a lot of fraudulent things that are ultimately lying to these kids and people who think that they're, going to be worked with in order to pay these, astronomical debts back. But it obviously turned out not to be the case. So just shows here how, if you got a good government contract as a company, you're okay. But yet for the students itself, you're going to be in worse trouble, because there ain't no chance of really repaying those loans, in my opinion. And then the last article here is from Bloomberg as well. And this talks about how Bloomberg, how in Singapore, how because of, this is interesting right here, because of all the bond defaults, and they actually gave a number here. It says there have been 100 bond defaults globally this year through July 15th, compared with 62 failures at this time last year. So you factor in the negative rates, and you factor in the fact that, you know, all these companies, you know, are basically not making good on their promises. There's more companies that's going to be filing for bankruptcy. And so Singapore wants in on the action. They want to become one of the safe havens that companies and can come to take advantage of these bankruptcy laws. And so they're in the process now of passing some Chapter 11 type of legislation in Singapore that would allow companies to utilize their law system there to basically, you know, get out of, you know, these debt defaults. And so between negative interest rates, you know, student loan debt through the roof and getting worse, you have bonds, companies that, you know, 100 bond defaults thus far this year, and that's, you know, the worst since the fallout from the demise of Lehman Brothers. And it happened back in 2008, 2009 area. So you got all that right there factored in, and that's just, you know, basically making for some very disastrous times ahead. And so to go back to the article here where the young man, or not the young man, rather the Citibank economist mentioned how it's important to hold gold. You know, with all this stuff happening on negative rates, you know, losing money in the bank and bond defaults, you know, just, you know, little food for thought on how important it is to become more monetarily aware on things outside of the United States, because everything is kind of interrelated, because we're all under the central planning model of debt and credit expansion. So anyway, I thought I would share this. Let me know your thoughts. Hopefully this was informative. I'll post all the articles below for you. Hope this wasn't too long-winded, but other than that, you know, the goal is to become more monetarily aware and share this information, because I'm just a middleman, and these are the sources where they come from. So enjoy your day, and you know, talk to you guys soon.